So as nations start adopting, you're going to see nations buying, and I am worried that the UK could get left behind. And that affects us all. It affects my kids. It affects my potential grandkids one day. So I wanted to sort of bring that conversation up. So I raised a petition about establishing a Bitcoin reserve. Obviously, I'm a Bitcoiner. I work in crypto and do crypto tax, but I'm a Bitcoiner. So I think Bitcoin is the one that needs to be established. Absolutely, no doubt beyond that.
Robin, thank you very much for joining me. How are you doing?
Yeah, good, Jordan. Thanks for having me on.
Yeah, it's good. I only met you in person for the first time. Was it? It must have been like 3 weeks ago now.
3 weeks ago, I think. Yeah, at the
Yeah,
Bitcoin for Institutions event.
yeah. It's always good when you talk to someone online for so long, and then you actually put a face to the account.
Do you know what? It's really funny as well, because when I introduced myself to you, when we spoke, I was probably, on Twitter, and, no one knows who you are. And then I'm like, I'm Robin, by the way. Oh, you might know me as this. It's like, I don't know if people know my name or know, it's so weird, but it feels like you've known people for ages, but never met them.
Yeah, when people come up to me and say, "Yeah, I'm this," I'm like, "Can you show me your profile picture?"
Yeah, exactly. Yeah. And that's exactly it. I mean, even I met like Joe Bryan, and I've spoken to Joe for months, and he was like, Robin, and he was like, you're not wearing your glasses. I didn't recognize you, that sort of thing,
It is so funny. Well, yeah, it's great to have you on. And let's just kick it off with, starting. Yeah, what's your journey? Because you're an accountant. So how long have you been doing that?
Yeah, so I've been an accountant about 20 years. About 6 years ago, probably just pre-COVID sort of times, I started my own business whilst I was working. COVID changed that a little bit in a good way. Business got much bigger and outgrew my 9 to 5, and I left that. But I've been in finance and accounting for best part of 20 years now. I sort of started off just working for small businesses, went into big businesses, worked at FTSE companies and things like that, and then came back out to work for myself. And yeah, I wouldn't go back.
What drove you to work for yourself? Just because I had on the last episode, I had Alan Smith on, and we talked a lot about this, like the risks you take to then start something yourself.
I'm really lucky because I get to speak to people all the time, and I think there are different types of people. Some people have to be in that 9 to 5 mentality. They have to know what they're getting in their pay at the end of the month. They don't want to get involved in tax and things like that. Other people are very entrepreneurial by design and just want that freedom. So I always had that inkling in the back that I wanted to run a business. I didn't know necessarily where that was going to be, whether it was going to be accountancy or something else. And then, like I say, I started doing bits for family and friends, and it just grew from there. And I think as an accountant, a lot of, I'm not speaking for everyone, I don't want to generalize, but a lot of accountants speak in very technical speak and don't make it easy for clients to understand. And I think luckily I'm okay at that, which meant that my business took off. And it was a natural progression from there. I left my job acrimoniously. They said they didn't know I had a limited company and they weren't happy with that, but it was the best thing that ever happened to me. So for me, it's something I could never go back to now. But yeah, it is a real interesting one. And like I say, being in the position I am and speaking to lots of people, I can see that for some people, I had a guy recently, and he did it last year and he just didn't like it. He just went, I can't be self-employed. I just need to be employed. It's just, different people, different things. But like I say, I love it. I love the freedom. I can't put my finger on what that freedom is, but I love that freedom.
Yeah, it's for some people it's worth, because there is a lot of faff involved in it, is what I'll say. But it's worth it for some people.
It's a roller coaster, right? Being self-employed is a huge roller coaster. Like, you'll have days where you feel the greatest ever and you've done a deal and it's like, yeah, this is going to be game changing. And then days where maybe someone leaves or something like that and you think, oh, this is the end. It's such a roller coaster, but I do love it.
Yeah, and you have to, and what I've learned is you have to enjoy those moments when you're at the top of the roller coaster, because I sometimes get into the headspace of when I'm at the top, I'm like, I'm gonna crash tomorrow, and
You,
uh,
you have to pat yourself on the back as well, because you have to sort of realize how far you've come, because it's always, I think it's an entrepreneurial thing. You're always thinking, what's the next step? Not, I've achieved what I was aiming for. You're always thinking, oh, I need to achieve more. And not, it doesn't have to just be money. It might be, certain things that you do, but you also have to look at that progress and not think, I need to be up here all the time. It's easy to not appreciate where you've got to. And I find that a lot.
yeah, 100%. Um, and when did you? Because on Twitter, you go by, is it the Bitcoin?
My handle is at the Secret Invest 2, which was the Secret Investor. That's how I started, right? The story behind that is during COVID times, I actually just wanted to go on there and get investment bits. You can search tickers. You could search Bitcoin, for example, and you just get what people are saying. And that was what it was. That's all it was. And I found a side of it that I didn't realize on social media was going to be possible, which is genuine people talking about genuine things, trying to help each other. And from there, I had my bit of a niche in the tax side of things where I could, just post the odd bit of tax advice, and it just grew from there. So I'm now called the Bitcoin and Crypto Accountant. That was a recent rebrand that I did. But my handle is still the Secret Investor, just to not confuse anyone.
Yeah. I'll link to everything in the description so they can follow you, because it's a very good follow. Just to keep on top of all of the tax stuff. And just generally another voice in the UK as well. So let's talk about your journey into Bitcoin. At what point did you come across it?
So I started out very much, I was very a blank canvas. I came into it going, right, what's digital? Everything's going digital. What's going to be the next thing that goes digital? And currency naturally came to that. I went into, crypto, went on my meme coin journey as everyone sort of does, and realized that this wasn't the answer. I made a bit of money, lost a bit of money, but realized that actually what I was investing in had no functional value, and I didn't really understand what I was doing. And I went to the Bitcoin conference in Miami in 2022, and watched Michael Saylor speak. And the way Saylor speaks, he speaks to me as a business person, and in accounting sort of lingo that's very plain to see. And I sort of went, actually, what he's saying about Bitcoin made a lot of sense. Later on the same day, I met Safedine and bought the Bitcoin standard and got it signed, and started reading that. And I'd say from there, I've never looked back.
Yeah, I mean, they're great people to be in front of at the start.
I mean, I'm really passionate about the fact that within not just Bitcoin, but in finance in general, just talking in plain language so people can understand what they don't understand is really key. I mean, I don't orange pill people, because most mainstream people are very abject to the idea of Bitcoin. But at the same time, if you speak to people in plain language, very much like Joe's video did with What's the Problem, they sort of think, well, actually, that's right. And that's sort of the journey I went on personally. I was like, I'm not, I'm finance literate, I'm tax literate, but money wise and origins of money, I wasn't very literate on, and we're not taught it. And I sort of went through that journey and went, actually, yeah, the fiat system doesn't make sense. And obviously, the more you go down that rabbit hole, the worse it gets.
Yeah, it is a never-ending rabbit hole. And it reminds me of a quote. I've quoted it a lot on the podcast, but it's simplicity is the ultimate sophistication. And so that's by Da Vinci, or the quote from Da Vinci. And I love that, because it is, if you can distill something
Yeah.
into language that someone else can understand, then it just shows such a depth of learning that you've gone through to be able to communicate that.
100%. And that's what, I mean, I'll be honest, in 2022, when I was in Miami, I sort of sat there and listened to some of the speakers, and my mind was blowing. I was like, I don't understand this. I don't understand what's going on. And that's why Saylor just spoke, and he said about his journey with MicroStrategy. And he went, I was just looking for an asset that could beat inflation, and property might lose less, but it doesn't beat it. He sort of said, look, real inflation is 10 to 15%. Property's not going to beat that. All other assets, bonds, etc., are going to be much below that. So he was looking for something that beats inflation, and he was like, he started looking at Bitcoin and understanding the fundamentals, and that was where that clicked with me as a business owner. I was like, yeah, that's a great point, because we all, in a sense, we're all taught to save, but what's the point in saving if your spending power is just reducing? You're not saving, you're losing.
100%. And I talked about this the other day, because I was brought up on you go to school, go to uni, and then you start a family, buy a house, the usual life lifestyle lifespan, and I just saying it's totally changed. Like, maybe that worked for generations before because real estate probably was one of the best stores of value that you could have. But now, in a digital era, like now the game has totally changed. And I can imagine that was like the penny drop moment, with by sailors saying that. Um,
I
how
100% agree. Yeah, I mean, the biggest thing, I'm still going through this journey at the moment. One of the biggest ones that I'm looking at now is sort of counterparty risk. The journeys I've been on with banks and exchanges and all of these things, and I sit there and go, for me, self sovereignty is the only way that you can be in control of where you are. Um, it's just it's a hard lesson to learn. But you realize that actually, money in a bank's not my money, it's a bank's money. They give it me when they choose, and they can stop me taking it if I want to. And that was a real hard lesson to learn, because you can't fathom that, because you grow up so differently. But again, one of the pieces, not just from podcasts like this, but also I've tried approaching universities and things like that. I just want people to have that open access to the information that I've had. And if I can say to people, read Broken Money, or read the Bitcoin Standard, or read the Fiat Standard, just those books that teach you a little thing, and they go away and do it, they can make their own mind up. What's the problem again? Go watch this video. Just those little things that teach you how the system works in very plain language, and then you can make your own mind up.
Yeah, it's not about pushing, and I spoke to Alan about this again on the previous podcast, is not about pushing Bitcoin down people's throats, because that doesn't work. I, I think a lot of people listening as well will have tried this. And because when you come into Bitcoin, you get really excited. And there's that period of, oh, I need to tell everyone and anyone, their dogs, their grams, everybody. um, and then you soon realize that, like, you're actually alienating yourself a little bit. And yeah, I think you're totally right. Like, showing people what the problem is in the easiest way. And you mentioned what's the problem, the video, which I will link below as well. But I use that. I want to say, I don't know on the daily, but definitely every week. At some point, I'm dropping that in to a conversation I'm having, commenting on something. And it's good to have those resources just at your disposal now.
100%. I mean, one of the things I learned very early on, because I speak at traditional finance events, and if you go onto a stage and say you've got 30, 40 entrepreneurs in front of you, and you're saying to them what you understand about money is wrong, they'll laugh you out of a room, because you're telling them they don't understand something they've done for 30 years. What you need to you just need to show them what the problem is, and then they might come to their own conclusion. But that's the way their brains will have to do it. They won't listen to me telling them they're wrong. They'll have to go and find it out themselves, and that's absolutely fine. But it is a hard thing to do, and that's why What's the Problem is such a good video, because it's done in that sort of way.
So, at these traditional finance events, are you challenging anything, or like broaching any subject around the problem, or are you just like going under the radar? What's the best approach with that sort of thing?
I think I let people go away, and what I'll very much offer them is the opportunity to have a discussion again at a later date about it, because people will always have challenges, right? So one of the biggest challenges that I see coming back from those sort of events are people will go, well, Bitcoin, people call it digital gold, but it's not digital gold. I'd rather have gold, which I understand. But for me, gold has two challenges, which is one of the journeys I've come to very recently, which is the counterparty risk. Or if you're going to self-custody it, that's a massive risk because you've got gold at your house, right? So that's a wrench attack waiting to happen. So, these sorts of things create challenges that Bitcoin answers, but Bitcoin answers that in a modern society, a digital society that we're in. And then once you go into the transactions where you can send it across the world in seconds and for minimal fees, that only adds to that. So I think a lot of people will have their mindset of gold is the answer, or, these other commodities. But I would generally say to people, go away and do your own research. I mean, one of the things that always sticks in my mind, and I'm sure you've heard this, is no, you'll never find someone that's done 100 hours research on Bitcoin that thinks Bitcoin will fail. And that's one of the keys for me. They have to go away and do their research. You're not going to find out, what's the problem. Will help you understand the problem, but then you need to go and find your own answer. Then come and speak to me when you think you've got the answer, and then we can discuss it and have an open debate. I don't ever sit there and think I'm the most knowledgeable Bitcoiner in a room, because I'm not. And I love that, though. I love learning from everyone in the space and, speaking to them and understanding more about their drivers and, what they think. I'm not going to get into this debate now, but I love the medium of exchange store of value debate. It's one of my favorite subjects, just because it gets people out of their shell, talking, going, this is what I think, you're wrong. Great. I love it because it teaches me something every time.
I was going to ask this later, but now you've just brought it up. What would you prefer? So at the moment, Bitcoin is taxed as an asset.
Correct.
But if we move more towards a medium of exchange, what happens then?
The difficulty with that is, and in honesty, we're so far from that it would be such a fundamental change that I don't know is the direct answer. HMRC are not going to get rid of this revenue that they can see overnight. I think that the challenge for me and the people I work with, Bitcoin Policy UK, I keep quite close to, but I'm part of Crypto UK. We speak to HMRC quite often. Part of the biggest point on my agenda at the moment would be for them to separate Bitcoin from crypto. That's the biggest challenge I see at the minute. Then we can start thinking about if it goes into a medium of exchange and becomes a currency. I heard someone on a video the other day, and I'm taking credit here, but I can't remember who it was. But what they said was, Bitcoin as a currency, governments will fight it, right? Because what you're doing is you're raging a war against their own currency. Like, for the British government, don't want the pound to fail. The pound is theirs. They control it. They won't let Bitcoin overtake the pound without a big fight. If Bitcoin works as a commodity, they'll leave it alone because they can tax it, because it works. They don't have to control it as a commodity, but it becomes outside. It's not warring against anything that they need it to, so to speak, or fighting. So for me, at this moment, a commodity works best for Bitcoin as a whole. And I don't mean that because I know what the white paper says, and I understand that, I've seen, I can't remember his name's gone out of my head. Jeff Booth talking recently. Yeah. He said, if Bitcoin fails as a medium of exchange, it fails. I understand all of that, and I do buy into that. But I think the short term, the commodity side of it just means it's left alone. But the tax side of it becomes more important if it gets separated away, because then I think we can talk about, things like what Germany do, where if you hold it for 12 months or more, you get tax breaks, and it becomes easier to do, because at the moment, all of it being grouped into crypto assets doesn't work.
Yeah. Well, and that's what I was going to bring that up as well. It was Jack Dorsey that said if it doesn't become a medium of exchange, it fails. Yeah. And that was a brilliant podcast, actually. It was
a really good podcast, and I don't know why. I must have watched the video of Jeff Booth after.
Yeah, I don't blame you. Both amazing to listen to. Can you go into because this gets brought up quite a lot, the difference, just quickly, how Germany tax it compared to how we tax it in the UK?
So, not an expert on German taxes, but my understanding is that in Germany, if you hold for over a 12-month period, you get reduced tax or no tax on holding Bitcoin. The UK doesn't tax it that way. As I say, the UK taxes it all in the crypto assets category, which means it all gets taxed on the gains you make at the time that you taxably dispose of it. Taxable disposal is when you gift, trade, sell, swap, whatever. Any change of beneficial ownership is a taxable disposal.
Yeah. And so you'd, because I submitted a petition to the UK government around establishing a strategic Bitcoin reserve, and you had submitted one late last year as well. Right. Wow. Okay. Can you talk through, like, why are you on number 4? What's happened to the first 3?
So and this is something I only want the debate. I want the conversation, and that's the key for me. It's not. I believe in, and I won't go into this, but I believe in Westminster. There's some form of code of silence. I think the reason they're not talking about it is a conscious reason, not just ignorance. So I wanted, with what Trump was doing, regardless of what I think of Trump, what he was doing is establishing Bitcoin as an asset class that needs to be recognized. And then we've got game theory that comes into play. So as nations start adopting, you're going to see nations buying. And I am worried that the UK could get left behind. And that affects us all. It affects my kids. It affects my potential grandkids one day. So I wanted to sort of bring that conversation up. So I raised a petition about establishing a Bitcoin reserve. Obviously, I'm a Bitcoiner. I work in crypto and do crypto tax, but I'm a Bitcoiner. So I think Bitcoin is the one that needs to be established. Absolutely no doubt beyond that. So I started off there. I went through back and forth with the petitions group, whoever they are. They basically said that Bitcoin is an institution or a company or a person, and therefore they cannot accept it, which makes no logical sense, as we all know, but they wouldn't take that. So their recommendation was to come back with a more broad digital assets one. So I went back and tried a second one, but I worded it probably not carefully enough, that it was digital assets, mainly Bitcoin or something like that. Again, they rejected it because I mentioned Bitcoin by name. On the third one, I went for digital assets only. And I'm going to be honest, I used AI to try and get around it, but I used example Bitcoin. So it was very generic. Again, they rejected it because of the mention of Bitcoin. My fourth one, I went even looser on the language and said many different, crypto assets and variables. That was the 13th of January. I've still not had a decision. So I'm chasing them, but they tell me that they're 6 to 8 weeks behind. Once the 8 weeks passed, I'd chase them again. They've not given me an answer. So they're being very cagey, and I don't really understand why, which is why I think in the background something more's going on.
That's so interesting, because mine got rejected as well, maybe a week or two ago, and I'd put exactly the same wording as the US. So I put establish a Bitcoin strategic reserve and a digital asset stockpile. And they came back saying, you can't do this because we can't have any institutions, organizations, or businesses. The same, it's probably exactly the same email that I got. But I thought it was because I tagged on digital assets, because a lot of them do come under that category of being a business or an organization outside of the UK.
It's really confusing, isn't it?
And but to hear that you've put in a Bitcoin only reserve and get the same answer back, that's shocking.
So I started the other way to you. I started at Bitcoin only and then progressed to digital assets and crypto assets, because that's what they basically instructed me to do. But I find it really odd. They can see what I've done, and they can see that I'm on the fourth one, and they can see that I've gone through the process that they're asking me to, which is why I think this last one is so delayed. I don't know what they're doing in the background, but it just feels really strange to me that they're doing it this way. Especially, as you say, I mean, one of the issues is when you go into the digital assets as a whole, you're including potentially really risky investments in there. So surely that makes it worse.
Doesn't make sense. Right, before we both get really annoyed, let's move on. So we're seeing like a massive trend with Bitcoin at the moment globally, with it being held on balance sheets around the world, whether that's corporate, whether that's just a small sole trader or limited company in the UK. Are you seeing a big trend as well?
There's definitely an increase. Mainly, I'm seeing a lot more in small businesses. I think the issue in larger businesses at the moment is I don't think they know where to go. When we were at that institutions event, I think the words chief Bitcoin officer were mentioned a lot, and I don't think they're ready for that yet. I think the difficulty is finding the information and the people they can trust to generate this to their board. So one of the conversations I've had, and I think I can openly speak about it, is being talked about at Chico, which is a school, Loch Lomond, who are going to be accepting Bitcoin, and they're creating a treasury strategy. I'm seeing more and more of that, more of the questions about how it's implemented and how they do it. A lot of that, as you probably know, with a company, it takes a year cycle to get to the end of year anyway, where they report it. So some of those are still in the early stages. But with the sort of banking challenges and things like that, I'm getting asked that a lot, which is why, I don't get anything for promoting them, but Coin Corner and their e-money account has become such a godsend to me as well as other businesses.
Can you, because I see that because Strike have something similar as well. And I know Coin Corner's e-money account. Can you just quickly explain to everyone like why that is such a big thing? Because it's been a big thing for me as well. But why not getting it directly from an exchange account?
So I've done a lot of research on this and spoken to a lot of banks personally. So I've spoken to account managers, because obviously being an accountant, banks speak to me, and it's quite an interesting conversation. Banks won't touch crypto or Bitcoin a lot because of the current. I don't know if you've seen, the scam rules have changed as well. So banks are becoming liable for a lot of scams. Now, what the issue with that is banks are seeing a lot of money leave every month, tens of millions of pounds, because they're having to repay people for scams that they're going through. A lot of that will be in crypto. So what that means is banks overall are taking a blanket approach that they already were to not allowing crypto transactions to take their risk away. So I understand it, but it's a growing industry and it doesn't make sense. So that has posed problems where when you send to an exchange, usually via bank transfer or card payments or anything, banks will just block it. They'll say, no, we're going to protect you from that potential scam and we're going to block it. It limits your opportunities, especially when you're a business, because with businesses, one of the challenges is getting in exchange in the first place can be hard. I remember when I first set mine up, I went through Binance. They asked for things that a small business wouldn't have. We need a total document of your share slip. Well, it's just me. Here's a box with my name on, and they were just like, no, we need more detail, but there is no more detail. So I went back and forth for months with Binance. I then tried Coinbase, who just didn't reply to me. I ended up getting a Kraken one, but again, the problem with that was they wouldn't, my bank won't touch that, and I was doing things like sending from one bank to another bank that would allow it, then putting it in and then moving it to cold storage, and it was all just a nightmare. And then I came across Coin Corner and Coin Corner's e-money account, and as you say, there are other options. I think Revolut has one as well. I've not used it, but I think they do. The great thing about it is you have your own account and sort code. So when you send it, all the bank sees is that sort code, that account number, and it's your business name. It's not a third party. It's just you transferring to another business bank account in your name, which means they don't pick it up. They don't even look at it. It's not a scam warning. They don't stop you. I think they can't stop you. So you can just send money there and it just goes straight away, and it appears in Coin Corner within minutes. If you use a DCA reference, it will buy Bitcoin automatically for you. So, I mean, I've got a daily DCA that goes on from my business at the moment, and it's just brilliant. I don't have to touch anything, and it just goes in there, and then I sweep it out to cold storage or multi-sig, whichever I want to use. So it's something that makes it so easy. And again, this is where the information that to bigger businesses comes from, because they wouldn't even know that. And how do you go on that journey? To the one thing about Bitcoin that's one of the barriers to entry is the technical aspect of it. People are scared of.
So true. And although the friction is getting less and less over time. Like, I still remember 2017. It was for my brother's business, is trying to set up a Binance account to then buy it. And we actually got to the point where we just gave up.
I gave up as well.
Yeah, it was so painful. But now, like, the options, although in the UK we don't have as many options as elsewhere, the options and the onboarding has got so much better. But as you said, it is just knowing where to look and knowing the playbook essentially for
Correct.
these small companies.
Is the playbook that there's the essential bit, because like I say, I used to operate a playbook that worked, but it was 4 or 5 transactions to get it to work. Don't get me wrong, after a while it became easy, you get used to it, but it's a lot to say to someone, well, you might need to set up a bank with XYZ bank and then transfer it there and then transfer it to your exchange and then buy the Bitcoin. And also it waters it all down. You know, once you've got £1,000 and you've done everything, you end up with 960 quid or whatever, which isn't significant in the long term, but short term, if you're losing 40 quid on £1,000 transaction, it's a decent amount. And you're thinking, is it worth it? You know, is that what I want to do? Et cetera, et cetera.
Yeah. So I've had quite a few questions because I put out on Twitter questions for you, and there's a lot. People want to know a lot. So I'm going to fire through a couple of them because a couple of them were questions I was going to ask anyway. So it's actually quite nice. So say someone is an individual, but they also run their own business as well. What's the difference between tax treatment between an individual and a business?
Okay, so there's a lot of, when I go into this, I'm always going to caveat it's all down to individual circumstances and what people want to do.
Yeah.
But from a high level point of view, you pay at a higher rate, you pay 24% on your capital gain that you make from the profit on the Bitcoin that you buy. In a company, you pay corporation tax on the profit, which can be, depending on the profit amount, it goes 19 and then ratchets up to about 24%. I usually use an average for conversations of 20%. So the tax rate's a bit different, but the key with a company is you're kicking the can down the road because yes, you pay 20% corporation tax on the profit, but then it's the company's money. Then to draw it out of the company, you pay further taxes, usually dividend taxes. Dividend taxes at higher rate when you go over 50 grand are 33.25%. So it's a big number when you combine that with the corporation tax. So most business owners, limited business owners at a smaller scale, generally keep their earnings under 50k. So a combination of salary and dividends at around 50k. But what you've then got, if you've got a big profit from Bitcoin, let's just say, you know, 10 years time, Bitcoin's £1 million and you bought one for £20,000, you've got a £980,000 profit. You're going to pay tax on that at 20%, you know, probably a bit more, but 20% brings it down to 800k. You've then got 800k tied in your company that you've got to find a way to get out, and there's going to be tax to pay if you draw it all out in one go. Whereas if we use the example for personal, that 980,000 gain is just taxed at 24%. The rest is yours. So usually, if you can, I would suggest keeping it personally. However, for business treasury needs, things like that, money you're not going to draw out anyway, or if there is a longer term tax plan in place, you may be able to use a company vehicle. Things like inheritance tax planning, all of those things can be important. But that's why, you know, it's so broad that I could give, you know, 10 people advice and give them all different strategies.
Yeah, that was a really good, like, just simple way of doing it as well. And as you said, like, everyone will be different when it comes to this. Like, that's super important. Okay, the next one is what records. So if you're buying Bitcoin in a business, what records do you need to show your accountant, and what are taxable events?
So any change of beneficial ownership is a taxable event. That's the simplest way to put it. So any change of beneficial ownership, and that is a disposal as at the day and the GBP equivalent on that day of the Bitcoin. HMRC, for tax purposes, They don't care about the amount of Bitcoin. They care about the GBP value of what you're doing. So that's key. So that's the taxable event side of it. You pay tax on the profit that you've made at that point. Sorry, what was the start bit of the question, Jordan?
What records do they need to show their accountant?
Good question. Okay, so the reason I'm going to answer this way is because I don't know if the person asking the question is a true Bitcoiner and they're thinking, do I need to disclose my stack? That's a good question. And it's one, as an accountant, I'm extremely sensitive to, and you should get an accountant who is sensitive to it. They may need to know certain things. For example, the end of the year, you would need to revalue your Bitcoin. You don't pay tax on the profit, but you need to revalue it, which means anyone with half a brain, if they say to you, how much was your Bitcoin worth on the 31st of March, they can work out how much you've got. So you need to be able to trust that person implicitly and understand that they will need to know that. That's the record keeping side. Try and make it as simple as possible. I always say this to people: the more wallets and things you use, the more complex your tax situation will come. I appreciate that people set things up quickly and, they do things to get it to work, but also bear in mind the complexity of the bookkeeping side of things, because it's one of the biggest challenges. Data is one of the biggest challenges I see daily. So the easier you can make it for yourself, the less it will cost you when your accountant has to analyze it, and the easier it will be. So I personally use a piece of software called Coinly. Coinly is tax software, pretty good. You just link a wallet or an exchange to it. It will pull through the data. That should be suffice for an accountant. If you keep on top of Coinly and make sure the data is complete, a crypto accountant or a Bitcoin aware accountant should be able to decipher that pretty easily. If not, you probably need to draft someone else in. For a Bitcoin treasury company, that shouldn't be too complex for a general accountant, being completely honest. But if you've been accepting payments or go into more complexities, you probably need someone that's pretty crypto and Bitcoin native. That's not just me trying to sell my service. That's just a piece of advice, because it will be cheaper and will be right. And the amount that I see that is wrong is just beyond belief. And people miss the fact that they sign it off. Their accountant's not liable. They've signed their name at the bottom to say it's correct. I appreciate your accountant's probably advised you, but you've signed it off, which means it's your responsibility to make sure it's correct. So get in the right advice for those records. But yeah, in terms of the actual records themselves, should be pretty simple. Get some software to help you, because it just keeps it in the background for you.
Solid. Next one is, this one's a bit trickier, so you can answer this how you like. I'm based in China, originally from Scotland. Holding Bitcoin, this isn't, it's not in a sentence. Wait. Holding Bitcoin, having been involved in mining out here, how can I get back to Scotland and use it to buy a house and retire in the most efficient manner possible?
So first and foremost, I'm going to caveat that with they need some Chinese tax advice.
Yeah.
So tax residency is a really complex one. So people get mixed up with residency and tax residency. Tax residency is a separate thing. Tax residency in the UK, I can talk about the UK quite openly. So the UK generally, if you're in the UK for more than 6 months, you are automatically a UK tax resident, regardless of where you're a resident, live in, or whatever otherwise. So this person is likely going to be in China and therefore be a Chinese tax resident. I can't categorically say they're not a UK tax resident, because I don't know how much time they've spent in the UK, etc. So that's a real caveat. If they want to come back, they have multiple choices. Now, if they come back and don't dispose of any of their Bitcoin or sell it or anything else, then that Bitcoin just comes back to the UK. And when they sell it and realize again, it's taxable in the UK. Regardless of whether they held it while they were in China or bought it while they were in China, what matters is when they dispose of it and the gain they make. From a Chinese perspective, there may be tax there. If they leave China and then dispose it in the UK, most countries will say, well, actually, unless you're gone for a period of time, potentially you owe tax in that country. As I say, potentially is a word I'm using there very openly, because I can't categorically say yes or no. So if I was in that position, I would consider the cleanest way to dispose it all, realize any gains, losses, and income from mining while I'm in China, pay the relevant tax there. Then when I move back to the UK, start afresh and clean the slate. Tax efficiency, I can't answer whether that's the best way and whether it's the most tax efficient. I don't know the Chinese tax rates off the top of my head. But that's the way I do it for simplicity.
You don't know the Chinese tax rates off the top of your head? Shocking.
No, terrible, terrible.
Okay, the next one is one actually that I get asked a lot and I do not know the answer to. And this is my question. This wasn't from anyone else. But so I've got a niece who's 2.
Yep.
I just turned 2. I've been buying her Bitcoin on the day she was born and then her last 2 birthdays. And I've just been buying it myself.
Yep.
And then just taking a note of how much I bought on that day. At some point, I'm going to have to gift this to her. Yep. What is the most efficient way of doing it? Because I can't just set her up. Would I be setting her up a wallet instead? Is that the better way to do it?
I would say setting up the wallet is the better way of doing it. First of all, the gift happens when you give it to her, right? So if you say it's her wallet, as long as you always have to be careful in Bitcoin and crypto that you don't use that wallet in future by mistake or otherwise. You know, that wallet then is set aside for her. The transactions that go in are hers. And then the only person that will interact with it and off-ramp it would be her in the future into her own KYC'd account. So you can then, therefore, whether the wallet is KYC'd or not doesn't really matter. You're saying she's the beneficial owner. So then every time you deposit into that wallet, that's hers. So, you know, if it was, I'm not saying you've done it this way, by the way, we haven't had this discussion, but if it was a Trezor or a Ledger or whatever, that's her Trezor, right? And one day you're going to give her the keys to that, but ultimately she is the beneficial owner from day one of that Trezor. If you wanted to cross your T's and dot your I's, you could create a deed of trust, which says this wallet address on this day, and I'd use AI for this. You don't need a lawyer, but get AI to say, here's a deed of trust or a deed of assignment to say that this wallet address from this date belonged to this person. You sign it as Jordan. She obviously won't sign it because she's 2, but she's got that then in the future to back up that all of those purchases from you were gifts. The other side of that is, God forbid anything happens, Jordan, but inheritance tax points of views as well. Inheritance tax kicks in on gifts if you die within 7 years of giving those gifts. So, you know, obviously, hopefully you've got a long life ahead of you, so it's not a concern for you at the moment. So that's good because she's not got any inheritance tax to worry about from your side in the future. So that's also important. And by setting that up from day one, you can say it's not my Bitcoin, so it's hers from that day. The other thing, your own tax as well. You know, if you're simply buying and sending to her, you're not going to have any gains or losses to realize at that point because you've given it to her at the moment you bought it. So that's also pretty key, because if you buy it and then give it to her 7 years later, you might have some tax to pay yourself on money that's not in your head, yours. So it goes back to the point earlier on bookkeeping. The easier you can make that bookkeeping, the more you can prove it if you're ever asked.
Yeah, that's how I thought would probably be the best way. It's not how I'm currently doing it, but it will be after this call. But I just get this question so much, and it is because with Bitcoin, you lower your time preference. So then you're thinking about children, you're thinking about the future, and there's no easy solution at the moment of like having, because it's quite complex for me to then say I get a Trezor, Ledger, Bitkey, whatever it is, to then I have to have the seed phrase to that. And there's no simple solution at the moment that I can see.
There isn't, but it comes down to, that's why I say the document as an extra, because what you're saying is, although you're in control of the wallet, you are in control of it. She is the beneficial owner. So regardless of who has those keys, the idea is that she is the beneficial owner, and you've documented that. But it is one of those ones that, the other thing is, this is still such a new asset, right? And things are changing every day. The thing is with new assets, there's very little case law and very little HMRC guidance to say these things. So for me, it's about using best judgment to prove what you're doing and say, I'm not trying to avoid any tax. I'm just creating a balance for my niece that is for her in the future. You know, it's the same concept as a trust fund. You put into a trust fund, but it's in her name. But actually, you've wanted to choose a different asset to utilize. So therefore, you just got to create that paperwork that backs it up a little bit. But as long as, from a case law perspective, the thing I always say is, as long as you can prove that the only thing going in there is deposits from you, gifts, then, as long as there's no other interaction of sending money back, etc., they can't really argue the beneficial ownership point of view, because no one else has benefited from the ownership of that. Whereas if you say you had half a Bitcoin in there and you went, I'm just going to take 0.1 back, that proves that actually you're the underlying owner of it. You're the underlying beneficiary. Whereas, if you're just putting into it, it's nice and clean and you can show that.
Yeah, that's great advice, and I know a lot of people benefit from that question. The next and final one on this is, so I talked about this again. I'm going to reference the last podcast because I'm on a very, seeing a lot of people leaving the UK, and it's annoying me. Or not annoying me, but it's sad to see.
Yes.
Question one is, are you also seeing this? And question two is, which is from one of the listeners, where are you seeing is the best location for people moving to get a 0% tax jurisdiction?
Okay, so I can answer that one really easily. At the moment, Dubai is hot. Everyone is going there, and I don't mean literally hot. I just mean businesses are going there. I think their corporation tax rates are pretty good. I think they've gotten zero tax on crypto, and obviously that falls into Bitcoin in that. I would caveat that, though, it's a very new economy. So what I think, my research about 4 years ago, I was dealing with a business that was trying to move to Dubai. And one of my concerns with that business advisor, and they were quite a big business, e-commerce business, that Dubai had recently changed its corporation tax rate from 5% to 10%. Now, that worried me because I sat there and thought, well, if they can do that so quickly, what's going to happen in the future when, as a progressive economy, when they change things? If I was going to up and move to Dubai today, I wouldn't want to think that in 4 years' time they could change the tax rate to be exactly the same as the UK. Not saying they're going to do that, but the chance of it is concerning. So it's undoubtedly the most popular at the moment. The answer to the other question is yes, I'm seeing a lot of people leave, but much, much more am I seeing businesses leave. And that's my concern, because what we're doing is we're forcing commerce out of this country. We're forcing people who would happily pay tax. But it's not people sitting there going, I don't want to pay any tax. It's that people say they want to pay fair taxes. They don't want to open a business that, first of all, is hindered. And then second of all, in the Web3 and crypto and Bitcoin space, a lot of people are being forced out because of FCA regulations. To say to a business, if you want to be a startup in Web3 and crypto, under financial promotions, you have to be FCA regulated. FCA regulation is not an easy thing to achieve. So that automatically puts a business out of scope and just says, not only do they not want to operate in the UK, they don't want to interact with the UK because they can't. Without FCA regulation, they can't deal with UK customers. So I'm not saying I don't understand why that regulation is put in place, but I'm saying that at the moment that hinders commerce in the UK. It's forcing people out from a tax perspective. It's forcing people out because they want to open businesses that they don't want to be fractured on day one. And then it's forcing people out from a tax perspective because things are just growing and getting worse. I mean, there's a lot of instability at the moment that we all know the government is not making enough money to fill the hole that they talk about. The only way the government increases revenue realistically is through tax. And I'm not supportive of a wealth tax. I don't think it will solve the problem. But that narrative is being fed by the media, which means a lot of people are, seeing. I watched GMTV yesterday and I saw some guy who communicated so well what a wealth tax would bring to this country. And I thought, he's told all of these millions of people literally a tiny snippet of a story to make them believe his narrative. And now, of all those millions of people, 70-80% will agree with him and think that's the answer. But it's not. It won't help us. It will make things worse. I think I saw a stat, and I'm quoting numbers here, but I'm paraphrasing, so some of these numbers may be wrong, but something like a high percentage, I'm going to say a high percentage rather than say the percentage, a high percentage in this country of the tax revenue comes from high net worth individuals already. What you're saying is you want to bring in a wealth tax to tax them further. So you're going to force them out of the country. because they're not going to stay and pay 80% tax on their high net worth. Then what you're saying to them is, well, Switzerland, for example, the one common thing, Switzerland has a wealth tax. Yes, but Switzerland doesn't have a lot of the other taxes we have. So what you're doing is taxing on taxing on taxing. So you've got to understand the other nations that have these wealth taxes don't have all of the taxes we have. So cumulatively, they're not paying more than us. They're just paying a different rate based on wealth and things like that, which to bring that in would change the whole tax structure, which isn't going to happen. It would cost them too many millions of pounds. I just don't see at the moment where the answer necessarily is. I personally think it's encouraging more in the economy. From a deficit point of view, I think I saw a thing at the last budget. No one's ever taxed their way out of a deficit. It's not possible, but that seems to be what our government is doing. So before I go on a massive rant, I do see it forcing commerce and people out of the country, and it is worrying, but I worry it's only going to get worse and you're forcing people's hand.
Yeah, I couldn't put it better myself. This is something that I've been now posting about quite a lot, because we are just like, it's like entrepreneurs that I look up to. It's friends who are entrepreneurs that are now leaving, which is quite sad to see. And I recently put something. It was like, it feels like we're living in a 3-star hotel but paying a 5-star rate. A lot of people picked up on that.
The other thing I'll add to that is, within this space that's one of the fastest emerging spaces, currently going, gig economy overall is massive. What we're basically saying is we don't want the next Google in this country, because they wouldn't be in this country. We'd force them out before they even started. Why would they start here? If you look at someone like, in Bitcoin specific, you look at strategy. Well, I think the spaces, I didn't go to it, but I think it had bits on how would you get the next UK strategy. My question would be, why would you get the next UK strategy? You'd open it somewhere else. You'd do the same concept, but you'd open it in a more friendly economic climate, I would say. Because at this moment, it's not just about where we are now, it's about where we're going and the uncertainty about where we're going and about what that might mean for a business. Are they going to attack corporation tax rates, which are pretty high, not overly high compared to other countries, but they're still, medium to high level. Are they going to attack those further and make us higher because they think it's an easy target? Well, possibly. They're not saying they're not going to. I'm not saying they will, because I don't necessarily think they will. But actually, I think on the extreme side, I think the best thing to do for the economy could be to lower corporation tax rates and encourage more people to open businesses and actually make it more tax efficient for them to do so, and therefore bring more money into the economy and bring new businesses into the economy. But that doesn't seem like a progressive approach that's being taken at the moment.
100%. Okay, the last one is just a fun question. I just want to see what your answer is to this. So say HMRC give you the pen to rewrite the rules around Bitcoin tax. What would be the first thing, or how would you approach that?
I think,
and crypto, if you want to throw in that as well.
No, I would firstly separate the two off. I think that's one of the most important things to happen. So then, from a Bitcoin side, I'd probably go towards the holder model, where you reward people for holding long term, because you're not necessarily losing economic benefit in the short term there. I think I do personally think regulation is really important within crypto as a whole. You can't overly regulate it, but regulation, if you look at the stock market, for example, you've got all these insider trading rules and things like that. Bitcoin doesn't necessarily have that at the moment, so there maybe needs to be things brought in on that. From a tax side, I'd put benefits for long-term holding. I think that would be pretty key. I think I personally sit there and go, look, we've got to make revenue in this country. The government have to make revenue, and whether you agree with paying tax on gains or not, I'm not here to necessarily debate that point. But if we can reward people for the longer term investment of it, it would make more sense to me. And specifically Bitcoin, because it's the most successful thus far that can be proved with historical data, and therefore also touch wood, one of the safer ones. And that, I think it is safe. I've got no doubts about that. So I think the risks are minimal. And therefore, by separating it off, you're not grouping yourself with potentially more dangerous projects that are involved. So that's probably the two things: tax breaks for holders and separating the two assets.
Awesome. Well, that runs us off. That's coming up for an hour. So yeah, thank you so much for coming on. This will be so helpful. I know this episode will be so helpful for a lot of people, and especially people in the UK, because we have talked a lot about, it is very UK specific. I will put all the links to you down below, so if anyone wants to reach out, they can find you there. But yeah, thank you again for coming on.
No worries. Anyone can reach out to me with any questions. I'm here. My primary goal is education. So if I can help someone, I'm happy to help them, as long as they're not spending 3 hours on the phone to me. And if I don't ever reply to a DM, just kick me. It's usually because I've read it, thought I'll reply later, and then forget.
Yeah, I'm bad for that as well.
Yeah. It's awful, isn't it? You sit there and go, yeah, I'll reply. And then you go like 2 weeks later, I'm like, I'm so sorry.
Okay, awesome. Thank you very much.
Thanks for having me, Jordan.